guys, I'm Kidex. So basically in this video, I'm gonna do a market break. It's actually episode 2. So I've kind of changed things in this video. So there's a catch. So basically I decided to like do videos when I analyze. So basically I want to do videos when I do my market break. Then basically when I am done analyzing, then in this video I'm not gonna like trade and show you all of this. So I'm just gonna do a market break. Then there'll be another video I will drop which will show basically the result of this video. So basically I'm doing this trying to show people the reality of being a trader, and cause a lot of traders outside, they definitely they do this replay bar and replay all of them and take all of these backwards and try to find perfect market moves. Then they analyze it for you and all this stuff, which is kind not good and not being honest about their work, because they just go back and analyze charts like way back then. They show you how they trade and all the stuff, which they don't really show you the reality of how the market move and the reality of how us traders do when we analyze. So basically I'm gonna analyze in this video, explain everything, how I come with these facts and all of everything. Then there'll be another video that is gonna be dropped, and then in that video basically I'm gonna reveal the result of this video while I was analyzing, then showing you that in this video we had this and that, then price. So basically I'm gonna show you reality of being a trader. So, and then I have something to show you too, which traders doesn't show you their trading history, account history, and all of these things. So basically I'm paper trading. This is not a real it's not a real account. So it's basically a paper trading is a demo. So I'm doing this to help new traders, accommodate everyone. So this is my trading history. When I approached the market, I executed. You can see pretty much there's no green, there's more losses, and sometimes I have wins. So basically I'm showing you the reality of being a trader. So those traders who lie to you and say, no, I'm winning 100% win rate, it's not possible. It can show you from from which month is this, from March, somewhere there, March. Okay, March, April, May. Yeah, from March. You can see in March I didn't trade. I had a loss that month from March until April. Then had a loss. I have one win that month. Then this one is not a loss. Just then from April to May, then I have green light. From May again I lost. Then this one is not a loss, it's not a win, $2, not something. Then from May again I lost, and I made again. Then you can see is the reality is how we experience these losses and everything. You can see there's no green on my account history, definitely showing you how as traders experience this journey, we experience a lot of mistake. We have a lot of mistake. I made a lot of mistakes. I've lost a lot of money. So basically, I'm using this trading view to analyze. Then basically, I go to my Exness account, which is this, my Exness. Then I basically do what I enter. I enter those trades and until I execute. So in this video, so there's much things to show you guys. So I'm gonna show you my trade today, this trade which made me 2000 again, which is in this account history. There is today, from this trade was from yesterday. Yeah, from yesterday. Then it ended at 4 o'clock. See, from 15 it ended today. So this is the profit that I've able to earn in my Exness thing. But I'm not gonna this is my Exness account. So basically in my Exness account, so I made this on this analyze on this market break yesterday. I did it yesterday. Then I entered pretty much here from this point. So yesterday time is 11:53 at morning. Then from here at this point, that's where I executed the trade. That's where at 4 o'clock. So you can see, so basically today I'm gonna show you analyze some of maybe British pound per slash US dollar, or US dollar, Canadian dollar. There's a lot to show you. So basically, so these pairs, I want to show you something about pairs too. There are some pairs they don't correlate. There are pairs that correlate, like this British pound per dollar. It doesn't correlate with a US dollar, Canadian dollar. So basically they move opposite. If the British basically sells, then the Canadian dollar buy. So it moves in the bullish way. So the other one when it moves with the British pound, when it moves when it goes with a bearish move, the Canadian dollar is gonna is gonna move with a bullish move. Bullish, then the other one is bearish. Then the other one is bearish. Then another one is bullish. So basically they don't correlate. So they're non-correlate pairs. So basically I want to start analyzing, then chopping the result at another video. So basically I'm going to start with the British pound. So basically my strategy, I trade dealing range, the dealing range theory. Dealing range theory, it has a lot of type can have type 1 and type 2. So basically in type 1 we're just gonna look for old highs and old low. So if we see old highs and old low, then we're gonna do our dealing range. Then the type 2 is when we look for two equal lows. It can be a double bottom or a double top. So it requires that. So basically I'm gonna start analyzing. Then on the video that I drop, after this one is going to be the result of everything that I have braked. Then let's get to it. So basically here I see a low, an old low. I start with my old low here at this point. This is an old low. So basically the market means that there's no longer liquidity here. Market has raided this low. Then we got a lot of highs we got an old high from this point, which we can take it. We got an old high from this point, and this point, but I will take this pull back here that made an old high. This is my old high, old low and old high. I found my old low and my old high. That's what I look, finding my dealing range. So now I know that this is a what? Is a type 1 dealing range. So I'm gonna be dealing with a type 1 dealing range. So basically I know that I basically know my bias right now. I'm going bearish, so it means I'm going bearish. Why do I say I'm going bearish? If you look at this old low and old highs, they actually tells you that your dealing range price has made a new high and a new before it made a low, right? It made a high, then what? A low. It means this is our initial high and low. So why I say we have a bearish bias, meaning that we are going from this point, we're gonna look for what? For entries from this point, from this 50% level of our dealing range, right? Of our dealing range. So we're gonna basically look for our dealing range, for our entries at the what? At the premium side. So that's where we're gonna look for our entries from this point up to this point. That's where, if there's some changes, you're gonna see price taking our dealing range high, then which means we have to shift our bias. Means that this dealing range, it means that our bullish dealing range, it fails to move price to the what? To the downside. But because it has taken the dealing range high, it means that this is gonna change into what? An old high. It means we have a what? A new DR high at the upside. So why I'm gonna show you why do I say that? You can see price from you can see price from this point, right? It went down, right? After going down, it made what? It made a small trend, uptrend, right? Then what? Take the high on our what? On our left side. Then take the high on this side. Then what? Take the low on what? And this side. By this result, it means that we have what? A new high and low, which is our dealing range, this point, right? At this point, okay, we have our dealing range at this point. If ever price take this dealing range, right, it certainly means that we are going to have what? A new DR high. So it means that this will be our initial dealing DR high, and then this one will be another one, initial DR low, which means we're gonna look for what? For entries at what? At the discount side of our we're gonna look for our entries at the discount side, which means anything that we see at the discount side, like fair value gap, order blocks or something, then we're gonna use that as our entry. Then we know that we got an entry, then we have what? We have a bullish bias at this point. So I kinda expect everything. I kind of expect anything that's going to happen. I don't sit down and say, no, this is my bias and stick with my bias. I know that this dealing range, it can fail. This bearish bias can fail to move. This dealing range can fail to move price to the downside, and then what? Take the DR high. By doing that, we shift. We don't say no, it's going to calm down, and then no. I shift my bias into what? A bullish bias, which means I'm gonna look for my what? I'm gonna look for my entries at the discount level, not the premium level, because the premium level failed to what? To move price to the downside. So now we're gonna like to look for entries in the what? In the discount level, where we're gonna move. If the discount level fails, again, I don't know, but we can't expect anything. So basically it will be a loss here. It might be a loss, but so I kind of expect those kind of things to happen. I expect anything. So basically I shift. If I shift to the lower time frame so that I can have more clear, I can see things clear, I can see everything more clear, then we can trade. So my first entry model that I see, firstly I'm gonna maybe try look for a point of interest. So a point of interest basically is where the market rejects a lot, like where the market rejects, like when it gets to that level, it rejects, even if it takes it after, but the fact that that level, it made price to what? To reject and move what? And make a pull down or pull up. Then after, we can look for order block, we can look for a fair value gap, we can look for breaker blocks. So there's a lot of things we can look, tons of things that we can look for entry. So firstly, I see this imbalance, a rapid imbalance. I find imbalance. So I see this is an imbalance, fair value gap, aka fair value gap. So if people don't know fair value gap, they know imbalance. Some they know imbalance, some they know fair value gap. So we start with a fair value gap. So you can see this is our what? Is our first entry model. So then we're gonna look for what? We got a lot, man. We got a lot. So I think I see a breaker block, but I'm not so sure about it. But I can go with this lower time frame order block. There's a one candle, one big candle. There you can see lower time frame order block in the upside, in the premium side. So basically this side is the premium side. So we look for entry models from the 50%, the equilibrium of our what? Dealing range. So we're gonna look for entry at our from the equilibrium to what? To the 100% of dealing range. So we got 50%, we got 75, then 100. So look, I see two things. I can find a inverse fair value gap in the upside. The inverse fair value gap, we can find that. We can find breaker block. There's a lot to look for. So you can see I got this and this, two things. So you can see already price went for the order block. That's why that's the nature of the order block. So it's created so that it pushes, it gives price momentum. Understand? So then you can go for a point of interest. So point of interest, I don't know what should I do. So let me do this. Then let's see what I can do. So basically I'm gonna be guided by my point of interest. So please, let's go. Then we can see, now you can see clearly by line charts, bro. So that's where we're gonna look where price rejects the most. You can see price what it rejects the most area of price. You can see that wicks are not actually price. Wicks are just represent the range where price went. It's just the range of price. I don't guarantee to trade. My stop, my take profit to be like at maybe weeks or something, because it's just the trace of price. Weeks, they just represent the trace of price and not actually price. So let's see if we can find a point of interest at this point. So basically we're gonna go from this point of the equilibrium, then we move this to the other side. Then we're gonna change that to the red. There you go. Then we're gonna change this into line. So basically I like to start to the upside. If there's nothing to the upside, I move to the downside. The downside is nothing, I move. But below me, let's see. So I feel like my point of interest is somewhere here. So we're gonna look for it. We're gonna look right. So from this one. I think that's it. So like that. So basically I look for primary price like respected this level. So I look for where price I just look where price respected this level a lot, then just gonna be like that. So it's just gonna be like that. So you have one, have two. Let me show you what I'm talking about. I have one, which is wicked, two, wicked, three. The price just respected this level, 4, 5, 6, 7, then this. You can see this is what I'm looking for. So basically I have a lot of things. So then you can see we got our entry model, we got everything. I think I'm gonna sell my market. Now I have to decide which entry model do I want to enter on it, which I got 1, 2, 3. So basically to make my life simple, to make my market break so simple, I just, if it's like this and everything doesn't fall under the order block, it's over the order block, I just enter on the 50% price of the dealing range, then looking to risk 20 pips in the upside in the premium level. So I'm looking to risk. So basically on my risk, I'm very careful with that. I don't just risk 50 pips because it's just one. I risk 50 pips, so I risk like that. It's only 2.42 reward ratio. Then that's it. That's how it is. Then basically we are done with the British pound. Then I'm gonna move to another currency pair, which another currency pair is actually opposite than this. So price is actually moving up beside down. So if this price increase, this goes down, we increase our dealing range. So that it's like that. It's just like that. If it happens like that, if price come take the whole dealing range, we what dealing range, the DR low, the initial DR low becomes what an old low. Then we focus on what, on the new one. So just like that. So I'm gonna pretty much show you the result on the next video. So basically now we're gonna go to another currency pair, which is US dollar, Canadian dollar, as this one. It's actually opposite. That's why I say the currencies are actually are not correlating. So what I mean by that is that when the other currency is actually going down, the other one is going up. It's like that. They move opposite from each other. So they move opposite. So you can see the Canadian dollar is actually buying. It's heavy. It's actually going on a bullish momentum. So it's moving now with a bullish momentum. So then now I'm gonna show you again. So we're gonna do the exactly same thing we did on the first currency. Is look for old highs and old low. And if you look, I already have my old highs and old lows. So basically here we're gonna it's gonna be basically a bullish bias. So I already know that. So if it changes, I shift everything changes. So if this does not happen, if market does not my entry models fails to move price to the upside down, then it means I have to change. So if then I wait for price to actually take the DR high or DR low, then if it changes, then everything shifts. It changes. I don't have to now stick on the thing because price, you don't know how price is gonna be in the future. I don't know how price is gonna be in the future, but now I'm actually doing this because of how price tells me. So if price actually take my DR low, it actually tells me that price now fails. It fails. So people need to understand that our strategy don't always work all the time. There are times that I lose and I have a losing streak, a bad one. I have not yet made it, and I'm not yet the best trader, but I'm still learning. I'm still learning from every mistake I'm making while trading. So people need to learn. Just learn from your mistake. You'll see progress. You'll see win rate. So but it's not guaranteed to be an actual win rate. It's something that's gonna happen. There'll be months, or there'll be that month you actually lose a lot of money, and then you feel overwhelmed, you feel like it's not working anymore. But one thing I can assure, do not change your strategy because you're at that moment or time your strategy doesn't work, then you decide to change, then you have ruined everything. Don't change. Just trade. Just love your strategy, trade, do your homeworks every day while when you approach the market, analyze and everything, you see the light. So many traders are not successful. Even me, I'm not yet successful, but I'm trying to be I'm trying to stick with my strategy no matter what. At bad times, at good times, I just stick with my strategy, and that's what I do. Every day I do this. If it fails, I accept. I say, okay, it failed, then means that today's not my day. Then I close my laptop and then I go outside and have fresh air. Then tomorrow I come back, the same thing. If it fails, I close it. I don't think a lot about my losses and my winnings or something. I just do what I have to do then and move on with life. That's how it is. So you can see this is an old low, an old low and old high. Then have a new old high here, but it's swept, but we're gonna take it anyway, but because it's recent, Now it's the initial high is our initial high right now, so we're gonna take it. I'm gonna show you if price move again to the upside. We patiently wait until price it moved to our discount level. That's where we say, okay, now we can now trade. We can now expect. Now we can expect price to either move the way we expected, or some changes are going to happen on that phase. So that's it, bro. Then that's how I do find my daily range like this. Then I move on. I don't actually change things every day, or some days I just do what I gotta do. Then that's it. I don't have to stress about things that I can control. I just trade. If it doesn't work, I close. I go outside. I talk to people. I do a lot of things to just forget and not to think a lot about my bad day or my losses. Then if it works, it works. You have made some money. Then you gotta just you have to just and then you just have to close the price. Okay, I made 2,000. Then okay, then I focus on tomorrow, so I don't actually jump around because I made 2,000. No, I just focus. Then that's where okay, tomorrow, today was a good day, and then I made 2,000. Then I focus on what's gonna happen tomorrow, and I focus on tomorrow, only tomorrow. Then when I'm done, then tomorrow I wake up 7 a.m. I look at the chart. I do my pre analysis. Then I analyze. Then again I make some money. If I have losses, close, done. So as you can see, I've done my daily range. Now I know price gonna move in a bullish momentum. So now I want to look for my entry models. Where I want to look for my entry models in this discount level. So I already see some. I see some. I see what order block. And downside, I see 3 flying and high time frame order block from this point. That's a higher time frame. That is a higher time frame. Then I see the I see imbalance, aka fair value gap, which is two of them. So basically I'm gonna like accommodate the other one. I don't have to do two fair value gaps and see which, just accommodate. So I just put them all and then take it as a higher time frame order block. As like this is the higher time frame order block. It means in the 15 minute time frame is a really is a order block, or in the 30 minutes is an order block, and actually a normal order block. Then oh my god, what the fuck. Okay, I got my order block here. Then pretty much look for a point of interest, so basically I'm in the 5 minute time frame. So these are all of these, you can see them here. There you go. That's what I've talked about. You can see in the 15 minutes is an actual fair value gap. Then you can see here we have an actual order block in the higher time frame. We have an actual one, we have another one in the higher time frame. If I go to the 30, you can see this will be a normal one, order block, higher time frame order block, which you can you can cater it very well. You can even put it very well in the higher time frame. then you go back in the lower time frame. You can see the order block start from this point to this point, the fair value gap start from this point to this point in the higher time frame. That's why I say I actually draw it out, all of it, all the imbalances that I see which are lined up, then they're actually gonna be my higher time frame imbalance. They're gonna act again as as my entry model. So pretty much I'm gonna put this here down here and do and target 50 pips to the upside. I actually target 50 pips. Then I actually would, if things goes bad, I actually would really even lose 20 pips of my trades. It's not that bad. It's 2.5 ratio reward. It's not. So I actually do like this: 20 pips, 50 pips. So I actually can risk 20 pips of my 20 pips of my money, then being able to to take 50 pips up. It's like that. I do that. Then so basically I'm not gonna go to other ones, which is a lot of job to do. Actually, you can see the New Zealand is not correlated to the Canadian dollar. So basically I'm gonna end it here. So make sure you subscribe, like, and share. So I'm gonna see you in the next video when I drop the result of these market breaks I've done here. So we're gonna end it here. Bye bye.